For cash management, is an important topic under working capital management. This section C, the working capital management. Cash management is very important because it is the integration of all working capital elements, including account receivables, including inventories, including accounts payables. So cash management is the important topic that you cannot miss it. First, you have to prepare a cash budget, okay? Because for under cash management, there are 3 areas involved. Okay, first is about the cash budget. You have to prepare a cash budget or cash forecast. Next is about the cash operating cycle. You have to determine working capital cycle or working capital requirements and cash to be raised, okay, based on the cash models or the treasury models. All right. So what is working capital cycle or what is working capital requirements? For working capital cycle is a cycle made up of current assets and current liabilities, okay? For example, here, you make purchases. You make purchases for the goods. Okay, so you have the payables, right? Because you made the purchase. Okay, then the goods will become your inventory. Okay, the goods will become your inventory and you sell it. Sell the goods. To the customers on a credit terms, then it will become your receivables. Okay, so from the purchase or from the payables, then become to your inventory, and then from the inventory, then become your receivables because you have already sold that items to your customers. And the customer paid you, the payment from the customer, it will become your cash balance, right? So you have the cash to pay, to settle the payables or to settle your staff salaries and wages. So it's the form of changing, okay? Change from payables or purchases to your inventory and then to the receivables and to your cash. Here is the working capital cycle. And here, okay, it can be interpreted or presented in 2 ways. Okay, one is the working capital requirements. Okay, working capital requirements is how much that you need to finance your working capital. Okay, so in next illustration, we will share with you how to get the working capital requirements computation correct. So take your time to read this question first. Okay, now we start to work out on this working capital requirements illustration questions. So here the information is you have the turnover figures for the year, and you have this cost. You have the cost of the expenses item here, which is the percentage of your total sales. And your source, and also you are given the receivables cycle, your inventory cycle, including the materials, including the WIP, the WIP, and also including the finished goods. And for the credit is taken, it means the payables for the materials, for the labor, for the variable overheads, for the fixed overhead, and for the selling expenses. Okay, all these payables items are here, or the payables period are here. So in this question, you just work it out. What's the how much the working capital is required for this business? So the first step is to find out the annual cost incurred incurred for the cost, because it's only a percentage. Okay, so the first step is find out the cost. Okay, materials is 1.5 million times 30%. So it means 450,000. Okay, and for the labor is 25% of 1.5 million. So in a year is 375,000. For the variable overhead is 10% of 1.5 million. So it's 150,000 in a year. For the fixed overhead, it's 15% of 1.5 million. So in a year, it has to spend 225,000. And for selling and distribution, is 5% of 1.5 million. It means 75,000. So it's the first step to work it out on those cost elements. The next is to find out the inventory. Step 2. The inventory calculation. So for materials or raw materials, okay, very clear. It's 450,000 times how long is it in the inventory? Is 3 months divided by 12, right? So for the raw materials, the value in inventory is 112,500. And for WIP, it is 50% of the value of the materials, of the labor, of the variable overhead. So for material, 450,000 times half of it. Okay. In WIP, this 2 months in the WIP. So here, if you work it out, is 37,500. For labor, $375,000, only take half of it, and with 2 months inventory cycle, so it's 31,000. 250, and for variable overhead is 150,000 times 0.5 and then times the inventory cycle. So it is 12,500. Okay, so here altogether is 81,250. So next is finished goods. Okay, we work out the raw materials, the WIP, and the next is the finished goods. Finished goods, also you have to check the materials, labor, and variable overhead. For finished goods, it will keep only 1 month. So 31,250 is for labor, and then for variable overhead, so the finished goods is also 81,250. Okay, so we got the inventory calculation for all inventory here, including raw materials, WIP, and finished goods. Is how much is it? So the total is $275,000. $275,000. Okay, for the inventory. And we have the inventory, we have the receivables. Receivables is 2.5 month receivable period. Okay, so the 2.5 divided by 12, and then times the annual credit sales, which is 1.5 million. So the total account receivable balance is $312,500. And for the payables, the materials is 2 months payable period, so it's 75,000. For labor, is you have to pay in 1 week because we have 50 weeks. Times 375,000, it means 77,500. For variable overhead, the settlement period is 1 month with 150,000, and it's 12,500. For the fixed overhead, it's 1/12. Times 225,000, so it means 18,750. And for selling and distribution, which is half month, so is the payable amount is 3,125. So for the payables is 116, 875, and the working capital requirement is how much? For inventory, 275,000 plus the account receivables is 312,500 minus accounts payable is 160,875. So altogether is 470,625. Okay. Here is the working capital requirement. So move on to cash operating cycle. Okay, we just share with you on the working capital requirements. So next part is about the cash operating cycle. In cash operating cycle, it is a length of time between a business paying for its materials and the business customers paying for the goods made from the raw materials. So in simple terms, say here is point X, and the end of this line is point Y. For point X, you pay for materials, and in point Y, you receive the money from your customers. Okay, so between X and Y is the cash operating cycle. Okay, simply because you pay the materials at point X, and then until point Y, you received your money by selling your goods. And also it equals to the receivables collection period plus the length of time for which the inventories are held, less the payables payment period. So here are three different formulas. For receivable period, is the average receivables divided by credit sales. Okay, times days, say 365 days. Okay, be careful of the terms credit sales. Okay, because I saw a lot of examination questions in the past few years, 2 or 3 years. They usually would like to give you some numbers. Say the company total sales is 1 million, and 80% of them are credit sales. So you have to find out the credit sales in order to get the receivable periods, or how to get the receivables. Be careful of these terms appear in examination. And for inventory, the period, inventory holding period, is the average inventory balance divided by cost of sales times 365 days. Okay. And for payables payment period is the average payables divided by the credit purchase. Times 365 days. Okay. So here is the formula for each items. And to make it simple, it is AR days or AR turnover days plus inventory turnover days minus payable days. Okay. And the operating cycle determines the amount of cash required to be input into the business. The longer the cycle, the more working capital the company needs. It means for example, here we have the formula. When it is longer the days, it means the company needs more working capital or more cash to finance its working capital. And how to reduce the operating cycle? Okay, just based on the formula we showed you before. First, you can consider how to reduce, or you can reduce the inventory holding. Okay, it is the fast way to reduce the number of days in the operating cycle, so that it can help you to release the cash demand for financing the working capitals. And the second step, or the second way to do, is to speed up the cash or the debt collection. To speed up the debt collection, as we share with you, you can offer some cash discount. You can offer some cash discount to speed up the debt collection. But remember, it's about the cost versus benefits, right? Any costs, any benefits. And also remember, there's a conflict between profitability and versus liquidity. It's a trade-off between profitability and liquidity in working capital management topic. Okay, so you speed up the debt collection, it means you have to pay, or you have to incur higher costs. It will affect your profits, okay, because you would like to have better liquidity. And the last way to reduce the operating cycle is to delay payments to payables, okay, to delay payments to payables. And how to reduce the operating cycle? Techniques include, first of all, reduce the raw materials, like if you are holding some raw materials for production, okay, you can consider how to reduce it. Okay, reduce it the level. Next one, okay, for example, here you can use the JIT. Just-in-time inventory management. Okay, your vendor or your supplier has to comply with you as well. Your supplier needs to work with you, okay, if you would like to have just-in-time inventory management system. Also, you can reduce the different parts or components of your products. It means you have to change your design, okay, to optimize the inventory, to optimize the whole working capital requirements. Next is to reduce your production time. For example, you redesign your factory layout to ensure a more efficient way to produce the goods, to avoid any long period or long waiting time for the WIP to enter next production process. So all these are helpful to reduce your inventory so that your operating cycle can be reduced as well. Reduce finished goods inventory holding period. Okay, just in case you have a better sales forecast. You have better sales forecast, so what produced can meet the sales demand. Then it helps to reduce the finished goods inventory in your warehouse. And also you can reduce the receivables collection period as we share with you. Cash discount can be offered. You can hire the factor servicing company to have a target reducing how many days of your receivables, and also you can check any other any other control procedures can be improved in your company to ensure a speedy or early settlement of outstanding receivables can be achieved. And also you can delay the payment of payables, but it is not a good sign of your company, because when you delay the payments, it means your company is showing a signal to the external party that you are not in a good shape in terms of financial situation.